So what are QuickBooks rules? They're a way to automatically categorize transactions in QuickBooks based on criteria you set. For example, you might create a rule that tells QuickBooks to categorize transactions from Office Depot as office supplies each time they appear. You can base a rule on the bank description, the amount, or a range of amounts, and you can also use more than one condition if needed. The easiest way to create a rule is directly from the bank feed. When you see a transaction you want to create a rule for, start by copying part of the bank description, keep the core vendor name, and leave out number or location details that might vary. Then click into the transaction and select Create Rule. From here, you can assign the vendor name and category, and choose how QuickBooks should recognize similar transactions going forward. First, you'll name the rule. There's no right or wrong way to do this. Some people use the vendor name, some describe what the rule does. I like to just paste the description I copied here because when I'm reviewing my rules later, I can see that at a glance, and it's also easier to press Ctrl-V than type something in. But since the rule name doesn't impact your books in any way, no need to stress about that part. Next, if the rule could apply to more than one account, you can switch this setting to all accounts on the right. Then you'll set the conditions QuickBooks uses to recognize similar transactions. One thing I like to do is switch the description toggle over to bank text. Bank text is what actually comes through on the bank feed, so matching on that tends to be more precise than matching on a description. And I'll go ahead and press Ctrl-V to paste that in here as well. When you're setting the condition itself, you want to be specific enough that the rule catches the right transactions, but not so specific that it only matches once and becomes useless. A good approach is to copy part of the bank description exactly as it appears, keeping the vendor name and leaving out numbers or location details that might vary. If you're unsure of how restrictive to make the rule, err on the side of being more restrictive. You can always change it later. From that point forward, QuickBooks will apply that rule to similar transactions. One important thing to note is that if a rule is set to auto-add, QuickBooks will record the transaction without you reviewing it first. I prefer to leave that setting off and review transactions with rules applied before adding them. You can do that by using the filter in the bank feed, checking that the transactions look correct, and then adding them all at once. There are a few things to watch out for when adding rules. First, don't make them too broad. If a rule is too general, it may apply to transactions you didn't intend. For example, a rule based on a word like payment could catch all kinds of unrelated transactions. A good tip here is to copy part of the bank description exactly as it appears. If needed, you can add more than one condition or even an amount to make the rule more precise. Second, review your rules periodically. Rules can drift over time if vendor names change, descriptions change, or the rule was too loose from the beginning. It's also a good idea to double-check that no rules were accidentally set to auto-add. Third, don't rely too heavily on automation. Rules are helpful for categorizing transactions, but you still want a review process in place to catch unusual amounts, unexpected categories, or anything that looks off on your reports. There are also a couple of situations where I'd be especially careful with rules. One is transfers and credit card payments. If you set up a rule for transfers between business accounts for credit card payments, make sure you're only recording one side of the transaction. Otherwise, you can create duplicates. For example, if you regularly transfer money from checking to savings, you might create a rule in the checking account for transactions that include part of the transfer description or account number, and then categorize them as transfers. Then when the matching transaction appears in the savings account, you would match it instead of adding it again. So in other words, don't add a rule for the same transfer in both the checking account and the savings account. Another situation to be careful with is when you create invoices or bills in QuickBooks. In that case, you generally do not want rules categorizing customer payments as income or vendor payments as expenses if those payments are supposed to connect back to invoices or bills already entered in the system. That's one way books can get messy. The invoice or bill creates the income or expense, and then the payment gets recorded a second time as if it were a new income or expense. So rules tend to work best for recurring expenses, consistent vendors, and simple repeat transactions. They're less useful for one-time transactions, unusual transactions, or anything that requires more judgment. Overall, QuickBooks rules are a great way to speed up your bookkeeping